Hello, my name is Tiaan Herselman. I'm the Head of Advice at Old Mutual Wealth. It was quite an interesting and also rather market-friendly budget speech from Minister Gurungwana today. But how does the budget speech actually impact your personal finances and your financial planning, i.e. your cash flow? Well, let's start with probably the most important part for all of us. What's the net income we can expect to receive on our taxable income? Well, we saw the personal income tax brackets adjusted for inflation of 4.9%. Now, if you are below the age of 65, earning 30,000 Rand per month, you can expect to receive a net income of 25,200 Rand. If you are earning 50,000 Rand below the age of 65, that amount now after the adjustments is 38,600 Rand. And if you are earning 100,000 Rand a month, you can expect to receive an income of 68,800 Rand per month. But what about tax efficiency when investing, looking long term? Well, the existing interest exemptions for individuals has remained unchanged at 23,800 Rand for individuals below the age of 65 and 34,500 Rand for individuals who are 65 years and older. This has remained unchanged since 2012. Then let's look at dividends. Dividends received by individuals from South African companies are still taxed at a flat rate of 20%. This was last increased from 15% to 20% in 2017. If you're investing into offshore companies, most foreign dividends are still taxed at an effective rate of 20% for offshore dividends. Now let's look at capital gains tax. Capital gains tax has remained unchanged for individuals and special trusts at a rate of 40%, with the first 40,000 being exempt and 80% for other trusts with no exemption whatsoever. Now, the good news in this budget speech is that finally the brackets for transfer duties, retirement fund lump sum benefits and retirement fund lump sum withdrawal benefits will be adjusted upwards by 10% to compensate for inflation from the 1st of March. This means that if you were to retire, commute 1/3 from your retirement funds, the first 550,000 Rand can now be withdrawn tax-free if you've taken no other previous lump sums. The first 27,500 Rand upon withdrawal will now be tax-free as opposed to 25,000 previously, and transfer duty has been lifted from the minimum 1 million to 1.1 million Rand. Now, retirement annuities, the conventional retirement investment, these are still great savings vehicles to reduce your income tax liability for the year with a deduction up to 27% of the greater of remuneration or taxable income. But keep in mind, it's still limited to 350,000 Rand. We've seen no changes here. And a great thing about these investments is that they are still exempt from estate duty unless you have disallowed contributions. So, in simple terms, if your income is 50,000 Rand per month, your income tax liability would usually be with a new tax rate about 11,300 Rand based on the latest tax tables. But if you now further contributed 5,000 Rand per month to a retirement annuity, your income tax would reduce to 9,500 Rand, which equates to a saving of 1,800 Rand per month. Now, hopefully you are putting this into a tax-free investment. The tax-free investment annual contribution limit remains unchanged at 36,000 Rand per annum, and the lifetime limit is unchanged at 500,000 Rand. Now, you might think, why is all of this important in the budget speech? Well, taking into account the tax benefits associated with retirement funds and tax-free investments, it's worthwhile considering these additional contributions that you might have to put them into retirement funds and then take the tax saving received from SARS and potentially putting that into your liquid investments, such as your tax-free or discretionary investments, or even a unit trust. I can even recall the late Professor Matthew Lester from Rhodes University, and also a member of the Davis Tax Committee, saying, I would bond my house and increase my bond in order to contribute to a retirement annuity every year. Now, I think what's important to note is any financial plan, when specifically planning for retirement, needs to strike this balance between income longevity, tax efficiency, and overall liquidity. These are important aspects to consider when choosing the most appropriate investment vehicle. Completely new to this budget is a deduction for solar for individuals. For the first time, we will see a new tax incentive for individuals to install rooftop solar panels to reduce pressure on the grid and help ease the load shedding. Individuals who install rooftop solar panels from the 1st of March 2023 will now for the first time be able to claim a rebate of 25% of the cost of the panels up to a maximum of 15,000 Rand. And this can be used to reduce their tax liability in the 2023-2024 tax year. This incentive will only be available for 1 year. So in essence, not too many changes from a personal financial planning perspective. It's still a question of, am I going to retirement annuity, liquid investment, and getting the balance between all of these elements is very important. And that's why it's always good to consult a financial planner.